Hi everyone. I'm sure you would have landed here because you are at the juncture where you have to choose fixed interest rate versus floating interest rate for your home loan. They say that once bitten, twice shy. Post COVID, interest rates have been going up and up with everyone suffering whoever took floating interest rate loan. And I'm sure that sort of a setback or that sort of an experience must be affecting a lot of your decisions. But let's not get emotional when it comes to these financial decisions. Let's look at fixed interest rate versus floating interest rate, weigh the pros and cons in this entire video, and ensure that we have the right set of metrics to make the decision at the end of this video whether to choose fixed interest rate home loan or floating interest rate home loan. And none of them necessarily have to be the correct choice. It's not black and white. It's based on what sort of a risk appetite you have, what sort of a person you are, what sort of financial discipline you have, right? Let's look at it. Hi, this is Mangesh Sope. I'm from Peaceful Loans. We've been helping a lot of consumers who are confused with these real world problems, but they're shy of asking a banker or anybody in and around them because either the banker does not want to answer these sort of questions, they don't have patience for this, or they're feeling shy. So the best way to get any answers related to home loans is reach out to us for a one-on-one consultation call, and feel free to ask any question under the earth related to home loan, because no question is stupid. Every question, having the answer to that question in a simplistic manner, ensures that you can save lakhs of rupees. So please avail the service and be on the journey of saving lakhs of rupees for your home loan. So now let's deep dive into these two different types of interest rates. What is a fixed interest rate? Fixed interest rate is nothing but a constant number in interest rate which will not change during the entire tenure of the loan. And floating interest rate means that this interest rate can go up or down depending on a certain benchmark interest rate. Now for different banks, that benchmark could be different. Some banks may follow something called as EBLR, which is external benchmark lending rate, which the banks publish every month. Each bank is legally liable to publish this. It could be your home loan is EBLR plus 2%, which is bank's margin. Or it could be the case that your floating interest rate is linked to repo rate, which is RBI defined rate, which is repo rate plus say 3.5-4% margin. These are the two ways the floating rates are defined. Now, if you want to deep dive and understand which one of this is more useful to you or which will save you a lot of money, we will deep dive into each of this. But if you want to take a separate example and understand what is a floating rate versus a fixed interest rate, let's assume you went to a gym today to take a membership, and the gym staff tells you that you can take 10-year membership at the same price per year, but you have to lock in those 10 years now, versus every year you have a chance of renewing the membership based on whatever is the prevalent rate at that point of time. That's the difference, exact difference between a fixed interest rate loan versus a floating interest rate loan. Hope that gives you a simplistic way of understanding this. Now let's deep dive and try and figure out what are the pros of fixed interest rate home loan versus floating. First and foremost, it's important to understand that fixed interest rate home loan means you have lesser risk, but the bank has higher risk. That means from the word get-go, fixed interest rate home loan will always be more expensive as compared to floating interest rate home loan. The difference could be probably 0.5% to 1% sort of extra, right? That means from the word go, you're choosing a more expensive product. But the pro of choosing this expensive product is this EMI associated with this loan remains consistent. That means if you're running on a tight budget, you're essentially saying that there is no wiggle room in your outgoing, That means you need predictability, and you as a person is risk averse person, then this is the right set of interest rate for you to choose. The second thing is, when it comes to floating interest rate, they change with respect to RBI repo rate or a derivative of that, which is EBLR, which we discussed in the earlier part of this video. Now this has an opportunity for the interest rate to go up or go down as well, right? So it's important for you to figure out and speak to somebody who's an expert who understands macroeconomic factor wise, will the interest rates go up over the next 3, 4, 5 years, or the interest rates will go down over the next 3, 4, 5 years. And if the answer to that is the interest rates are going to go down, then of course you should choose a floating interest rate loan. But if the clarity as far as macroeconomic factor is that interest rates will keep going up, then it might be wiser to choose fixed interest rate home loan at this point of time. Hence, it's important that somebody handholds you and navigates through this journey rather than you making this decision only based on emotions. Not only that, you should also read some fine print as far as fixed interest rate versus floating interest rate is concerned. Two very important factors we guide our customers all the time on is prepayment charges and lock-in period, right? Now, lock-in period essentially means that for the first, say, 3 or 4 years out of the 10-year tenure of the loan, you cannot prepay this loan. That means even if you have a cheaper alternative available in the market, you can't switch from bank A to bank B. Even within that bank, if the interest rate available for home loans cheaper, you can't switch. That is what lock-in period means, right? This can sometimes reduce your options in terms of saving money, right? So, but if the environment is an environment where the interest rate is going up for the next 3, 4 years, then it doesn't matter, right? Hence, it's important to have a guidance of an expert at this point of time. The second is your ability to prepay. What if your salary just goes up in this increment? You get a bumper bonus. Then you would want to repay this loan. And if you want to understand how much you save by prepayment, you should look at our another video where we've explained the building blocks of EMI and how you can leverage different aspects to save lakhs of rupees on your home loan, right? There we explain whenever possible, prepay the loan as early as possible in the tenure. But if a fixed interest home loan does not allow you to do that, that means you will not be able to save as much money as, say, your friend who would have taken a floating interest rate loan. And these are the pros and cons one should weigh when you're looking at fixed interest rate versus floating interest rate home loan. I'm sure if you're still confused and you find this a very tricky decision to make, you don't have enough tools to make this decision, please feel free to book a one-on-one consultation call with our team of experts, and we'll guide you in terms of choosing which one is the best one to take. For you to book that consultation call, we have dropped link for booking that call in the description. If you want to directly reach out on WhatsApp or phone call, the number is also in the description box. We're constantly putting an effort to bring you the content which will eventually help you save money on your home loan. And at the same time, impart the knowledge where there's a lot of confusion in the market, right? If you like our efforts so far, as a vote of confidence and encouragement, please do subscribe to our channel so that every time we bring in the next set of videos to help you save money on home loans, you're alerted. And for you to be alerted, I'm sure you know that you have to press the bell icon. Now, if you found this valuable and you would know somebody who is in the process of getting home loan or buying their home, please do share this content with that friend or family so that they can also be benefited by this video.